Right, first up on the bulletin today, Bengaluru-based wealth tech platform Wealthy.in announced earlier this week that it had raised 130 crore rupees in a Series B round led by Bertelsmann India Investments. The round also saw participation from existing investor Alpha Wave Global, new investor Shepherd's Hill, and a group of tech entrepreneurs. Now, one might argue that the funding comes at a rather fortuitous time, not just for Wealthy.in, but the overall tech ecosystem in Bengaluru. A recent Traction study said that VC funding among the city's tech startups had dried up in the first 9 months of 2025 and that investors simply weren't writing big checks, at least not anymore. So to speak to us about the recent round of funding, where the money is going and how hard the overall funding ecosystem has been, I'm now joined by Aditya Agarwal, co-founder at Wealthy.in. Aditya, welcome to the show. First question, 130 crore rupees is what you raised as part of your Series B round. Where will you be deploying these funds?
Thanks, Jude. Happy to be here. So as you know, we are a platform that empowers India's financial advisors who are solopreneurs and operating as independent all over the country. So idea with this fundraise is to further deepen our tech ecosystem. And I think specifically the focus is a lot on building AI tools that can empower these small entrepreneurs across the country. And of course, the second plan is to go deeper into the country. We are currently present in 20 odd cities with our offices. So idea is to scale that presence further deeper into India.
Right, that's an expansion roadmap that you are rolling out by way of the recent round itself, and all in the attempt to penetrate deeper insofar as your operations in India are concerned. But what's the game plan as far as future funding rounds go, Aditya? When do you expect to raise the next few rounds for Wealthy.in? And do you expect these rounds to keep rising in ticket size?
So actually, obviously we all love to see large funding rounds, but as a business, actually, your intention is always to be the most efficient with capital. So what you want to do is to build the most profitable business with the least amount of capital. Like that's the equation you're trying to solve. But India is very unique in the sense that we are growing so fast. Everywhere you look at, we are growing. Any industry that you look at is growing at 15-20%. And with tech-led adoption, like for example, for us, we are growing at 100% year on year. So when you're growing at such a fast pace and still there is more and more demand, so it makes sense to invest early into your journey, right? So I think for us as a business, we will not need capital to survive, but we'll definitely need more capital to grow. So maybe once we are currently at about 5,000 crores of AUM, idea is that once we hit 15,000 crores of AUM, which should happen for us in 18 to 20 months, is when probably we will deploy more capital into continuing to grow the presence and grow the business.
Absolutely. So lots to look forward to there as far as both capital and future funding goes, even as you outlined that plan to grow at 100% CAGR. Aditya, it's interesting we're having this discussion at this time. You've probably read that Traction study as well as I have, and we reported just yesterday on the show as well. The fact is this year has been rather tough for Bengaluru's tech ecosystem in terms of funding. Yeah. 40% drop in VC funding compared to January, September 2024. What's going on? Are investors reluctant to write big checks? What have your investors been saying? Have you had trouble convincing them to part with the money?
No, actually, there is money available for good business always. In India, Indian VCs are sitting on a record dry powder, right? As we all know. And there's always money available for good businesses. But actually, as a startup founder and as a part of tech ecosystem, I'm actually proud of last 2 years. Because what has happened in last 2 years is that our companies that were young, that were born in front of our own eyes, became so big that they went public and returned tons of capital to their early investors. So actually, even if I look at just Bangalore-based companies, in last maybe 3 months alone, we have had more than 15,000 crores of capital raised in primary markets, right? So, I would say that as a startup ecosystem, we have really matured, that we are coming to a stage where our companies are returning capital to the early stage of investors. Because ultimately, whether we take in $1 billion, $10 billion, ultimate is that, that those investors should make returns on it and they should see that liquidity, right? Because once they do that, then they will be actually attracted to invest more and more again in the ecosystem. So actually, I see it slightly differently. I think that and I'm extremely proud of the fact that so many companies have gone public and raised so much money from primary markets. Maybe, I can expand a little bit more on, one thing that you definitely alluded to is that, large checks have disappeared. That is true. But if you look at all those companies or large platforms that could absorb large checks, right? Large e-commerce platforms or large payments companies or large food delivery companies or large EV companies, they've all gone public. So they are still raising large checks, but they're raising in primary markets. So I think that is probably, I would say we should sort of look at it with a different lens. Secondly, of course, a lot of money in last 2 years globally has gone into the AI, and India actually has practically, we have probably not received even a single dollar out of that 500, $600 billion that have been invested in. So I would say that's one reason why we have sort of not seen large ticket, funding rounds in the last couple of years from young companies.
It's a very interesting take there. In fact, I agree with you. The last couple of years have been a fairy tale of sorts, but that hasn't quite been the case in the first 9 months this year. At least that's what the numbers say. Even on the IPO front, a drastic drop. Like you said, large checks have also dried up, just 2 of them in January to September this year versus 9 last year. So the question really is, what's the strategy now that startups are left with to navigate this present-day glut in funding, especially as far as the tech ecosystem is concerned? How do startups get by really, Aditya?
So when I actually speak to my fellow founder friends who are running companies, I actually see none of them are struggling per se. So because 2 things happened. One is that 2-3 years back they raised enough capital, and secondly the business models have gone really resilient, right? Because I think that was one question mark that was raised on Indian startups a couple of years back. And on the flip side, what has happened is that there were companies that were not doing so well, and they were sort of masking their numbers or financial health with the fact that they were raising a lot of money. Some of them actually sort of disappeared from the map. So I would say that there's been sort of a cleanup going on, where good companies have continued to raise money at the right terms and at the right sort of value that they seek. At the same time, there's been a little bit of cleanup because a little bit of exuberance that developed in the post 2020 and post 2021 world. But as I said, when I speak to my co-founder, sort of founder colleagues in the ecosystem, I don't see a single company that is struggling as far as capital access to capital is concerned.
Right. A well-timed churn is perhaps what we'll call it. But, you of course agree that large checks have dried up and large rounds of funding have dried up. So when do you expect this inflection or, a bounce back to happen when it comes to funding for Bengaluru's tech startup ecosystem, at least in terms of large rounds? Is there a timeline in mind? And if this inflection does happen, how significant will it be?
So if you see, I think even that traction report actually mentions a very interesting point that the early stage funding has grown. So, as we all know, this is like a cycle. You have to put early stage capital for saplings or seeds to grow, and then they eventually become trees and sort of are able to absorb much larger capital. So if you see early stage funding has increased, like in our case also. So for example, if we have sort of absorbed 130 crores right now, that means that we'll be able to scale up much faster in next 24 months. So our next check will definitely be slightly higher. So we are seeing a new crop of companies that are coming out of those, those sort of early stage activity. So I would expect that, once we see this AI activity cool down a bit, and at the same time, we see new platforms emerging in India with the next set of stories, we'll probably start seeing those $100 million, $200 million checks again from, single investor to essentially build the next generation platform. So I think it may take still 18 to 24 months before we see really large checks return back.
Right. Well, what we can do is hope for the best and, hope that funding does make a comeback, especially larger checks, even though the whole AI transition is well and truly upon us. Well, thanks so much for joining us and breaking that down, Aditya. Pleasure speaking with you on startups funding and a whole lot more. Thanks so much.
Thanks, Jude. Pleasure to be here. Bye.